3 signs that your
Good evening, good evening, everybody. How y'all doing? Hopefully everyone doing as well. Y'all go ahead and pull up in here. Stop this music from playing in my ear. Got the music blaring in my ear. Is it 6 o'clock? I think it's 6 o'clock. I guess ain't nobody go. I guess everybody used to me not doing live streams. I guess ain't nobody gonna pull up. I see Jim in here. What's going on, Jim? Where everybody at, Jim? Okay, I see Valentine. I see Honey. What's going on, Tish? How y'all doing, man? Thought y'all gonna leave me out here by my lonesome. Let me share. Uh-oh. Gonna share. All I want to do is zoom link. If I can copy the link. I'm gonna share the Zoom link for those on the U of the tube. The Zoom link is pinned to the chat. Speaking of the Zoom link being pinned to the chat, let me see if I can get this together here. Give myself a little bit of room. Give myself a little bit of room here. There you go. There you go. Put the mic like this. My mic sounds nice. Check one. Y'all bear with me. Y'all bear with me. I'm trying to get my technical issues together. Trying to bring the mic closer to me because, you know, when I had everything set up in the separate studio, before I turned that into my 15-year-old's bedroom, had a boom mic where I could just pull it right up and just keep the mic close to me at all times. And now this setup is a little different. The mic be a little farther away and people be like, Tim, I can't hear you. Tim, you sound so low. Tim, I can't, Tim, and Tim and Tim. So now, hopefully y'all can hear me well. And with that being said, if this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. But I want to give you a nice hearty. Well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., aka Aranya Grande. That's just Big Spot if you don't habla Espanol. And you are now in tune to another episode of The Intraday Price Action Recap. How y'all doing, man? Shout out to everybody who I just shouted out. I see more numbers than I see names in the chat, so I guess y'all don't want to holler at your boy. I don't know. Maybe y'all salty because I ain't been pulling up doing the live streams. Maybe y'all busy. Maybe y'all out eating dinner. I don't know what y'all doing, but I don't see nothing in the chat. So we're going to go ahead and get to it. I was thinking about doing live on IG, but my phone is it's plugged up into the charger, and I don't think IG will let you do live if you turn the phone sideways, because my phone. Let me see if it let me do it if I turn my phone sideways. I don't know. I don't feel like fooling with it, so that's not going to happen. Anyway, let's get to it, man. Let me share my screen to get to it. Shout out gang that's pulling up inside the Zoom. Shout out Jim. Shout out Slater. Shout out Yolanda. Shout out Michelle Tucker. I ain't seen Michelle in a month of Sundays. I thought Michelle had slipped off the face of the earth. Oh, where has my Michelle gone? I don't know where Michelle could be. Michelle just fell off the face of the earth. Michelle ain't got no love for us no more in the gang. Don't pull up to none of the live streams. Don't do nothing. Just don't be around. If I knew, I wouldn't have said it. Let's get to it, man. As y'all see on the screen, hither. Maybe it's hither. Maybe if I do like that, that's where the screen is. Yes, right there. If I do like that, if I point at the screen like that, I'm pointing at the screen. If I point at the screen like this, I'm not pointing at the screen. I'm pointing up. But if I point at the screen like that, I'm pointing at the screen. So, yeah. If I look at the screen like that, I'm looking at the screen. Anyway, since it's Friday and I'm ready to play, we're going to do the weekend, not a day. We're going to do the whole week. Let's do the whole week. Speaking of the whole week, this is this purple rectangular shape down here, right? This purple rectangular shape here, that is our, what is that? Let me ask somebody who ain't never asked anything before. Slater, what is this purple rectangular box down here? What is that purple rectangular box?
Cool, man. I'm remedial. I don't know.
That is
Don't you hate it when you get called on in class?
No, I don't really hate it, but I just rather say I don't know than say the wrong thing, so it don't matter. I figure it all out.
That is our new week opening gap.
Dang, boy, I should have said that, cuz. God dang.
That is our new week opening gap.
Hey, don't ever put me on the spot again.
I will. I will.
Well, you remind me of Miss Lincoln, my second grade teacher. Don't do that.
So, for those who don't know what a new week opening gap is, A new week opening gap is the difference between the closing price Friday at 5 p.m. and the opening price Sunday at 6 p.m. That gives you the difference between those two prices gives you your new week opening gap. No matter how big or small it is, the difference between Friday's closing price at 5 p.m. and Sunday's opening price at 6 p.m. is a new week opening gap. Right? So I'm going to come here and I'm going to go to, where did I put it? Where did I put it? Where did I put it? I know I put it in here somewhere. Did I put it in the wrong spot? That's 512. Where is, did I put the wrong date? Oh, hold on for a second. Did I put the wrong date? I know I put it in here because I just made them this morning when I was, because Jim was like, Tim, you're not on the right contract, Tim. That ain't what mine looked like. You ain't on the right contract, Tim. And so I switched over to the front month. Did I date it wrong? Okay, I'm gonna do it like this. This is what wait, maybe I put it in here. No, I'm gonna do it like this. Got Gapapalooza over here. Oh, I know what it is. Those are the ones from earlier. I don't have the ones from now. That's what it is. Okay. All right. I'm not going crazy. It's the ones from way back in February that I had on there. It's not the ones from this week. Okay. So I'm not going crazy. Everybody calm down. I'm not going crazy. It's the ones from February. I was thinking I made the ones from today, right? And Jim was supposed to remind me of that because, it's because of Jim, the reason why I'm even back on this contract. So he was supposed to remind me and say, hey, Tim, those were the ones from February, not
Yeah, I think it was back from February 27th.
Oh, thank you, Jim. Thank you. Oh man, Jim, you just saved me. You just saved me like 5 minutes of frustration looking for something that I didn't even make. You just saved me. I appreciate that, Jim.
Yep, and that seemed pretty significant today. We drew up to it multiple times.
Yes. All right, so 194. All right, so let me move these down here. Move these down here in this area. Then, all right. Now that I got that here, so we got there. Take this, bring it here. Now, Slater, question for you again. Putting you on the spot. Right? Putting you on the spot. About to see what you made of. Right? About to see what you made of. What is, let me change the date on this right here. 5/13. 513. Right. $513. Okay. What is this?
Oh, man, I just be listening while I be doing other stuff. Go ahead. Let me
gray
see.
rectangular box right there.
What?
Right. We talked about the purple one.
Man, that's the same box.
It looked the same, but what is this one here? What is it?
God dang.
Like, okay, I'm gonna give you a clue. Right. What did we say? What did we say this was down here?
That's the new opening gap. I don't know what you're pointing at. I don't know what you're pointing at.
I'm about to get it in the screen. Right. We said that this one right here was the new week opening gap. Right. We said that was the new week opening gap. All right.
All right.
So now this one right here, right? This counter here is Monday. This counter here is Tuesday, right?
Yeah.
So what is this one right here? This one we went from Friday to Monday, the purple one. This one here we going from Monday to Tuesday. So what is this one right here?
Man.
Take a guess. Right?
You want to phone a friend?
Man, yeah, let me. What is it?
Let's see. Check it out now. Look at it.
They gave you hints in the chat now.
Look at the letters now.
Man, noonday opening gap. New day opening gap.
New day opening gap. There you go, man.
Okay.
Look at that, man. Shout out Slater, man.
Hey,
shout
man,
out Slater.
I be listening, but I might not be listening.
All right. New day opening gap.
Hey,
right?
Let me start taking me some notes, man. Dang.
Yeah, take some notes. Take some notes on the iPhone 1. Take some notes. Make sure you take notes on the same phone that you collect your booth rent on. Because I know you're going to look at that one.
I need that in the shop.
All right. So for anybody who don't know what a new day opening gap is, a new day opening gap is the difference between the closing price on any day Monday through Thursday, right? Any day Monday through Thursday, the closing price at 5 p.m. Eastern Standard Time and the opening price at 6 p.m. Eastern Standard Time. Any day Monday through Thursday. That's going to give you a new day opening gap. When you go from Friday to Sunday, that gives you the new week opening gap. It's the exact same thing, except for it's the new week transfers over to a new trading week. The new day, you're transferring over to the next trading day. The exact same thing. The difference between the futures close and the futures open over that 1 hour halt that's, that has to be done. I don't know why they got to do it. I don't know. I ain't never researched why they got to have a halt, but they have a halt. Go research why they got to have a halt and tell me why. All right. So now that we got that, let's go ahead and put in our new day opening gaps for the rest of the week. Because since we're on another contract here, I'm not on the continuous contract. So I'm going to have to clone these and put them on there really quick. So that was the new day. This right here is going to be the 14th.
Oh, I got a question.
Yeah.
They always going to be this color, purple and green?
Whatever color you want to make them. That's just the color I choose.
Oh,
I choose to use because you draw them yourself. You draw them out, yeah. And like weekly stuff, I use a purple color, right? And then the daily stuff I use black, but gray is like a shade of black, right? So that's why the new day is gray and the new week is purple. That's just the color scheme that I choose to use. All right. Let me y'all know how I am about my my boxes lining up on the right candle. So I got to yeah. And as you see there, as I'm making this here, I don't know if you can see it, but at the bottom, this candle here says May 13th, 2025 at 4:59 p.m. That's the last candle before 5 o'clock. Then this candle here says May 13th, 2025, 6 p.m. So the closing price on this candle is 21,254 and 3/4. The opening price on this candle here is 21,250. So that's a bearish new day opening gap because it gapped down when it opened. The first price was a gap down. So that's your new day opening gap for that day. All right. And it's dated, even though it says it's 6 p.m. on the 13th, the futures trading day starts at 6 p.m. in the evening. So the 14th, the trading day for the 14th actually starts at 6 p.m. on the 13th, right? It's 6 p.m. at night is when the futures day starts trading. The algorithms day starts at midnight, right? So true day for the concepts that we trade, it starts at midnight, but the actual futures day starts at 6 p.m., right? Got us a lot of refresher stuff going on in here. Refresher. Right? Ain't nothing wrong with going back to the basics, right? And right now I'm just trying to put my boxes on the right time. Oh, that's the one I'm about. This is the one I'm going to copy for the 15th. That's going to be my 15th. 12. No, I need a 13. I need a 13. I'm tweaking. I'm tweaking, y'all. Let me do it this way. Y'all blame Jim for this. I got to go back and get my chart back together. Got to get my chart together. There you go. Hold the phone. Jesus Christ. I'm frustrated now, y'all. I'm frustrated now. 13. Why is this not doing what I wanted to do? I'll tell you why. Because it's Jim's fault. I'll blame Jim. All right. 12, 12, 13, 14. All right. Now that'll waste a whole lot of time getting my current gaps on the chart. Whoo! Welcome. If this first time tuning in to Tim's Tidbits, ooh-wee. You must be Red Fox. Who you, Rich Fry? All right, so we're looking at these are 15-minute candles, right? And I got everything diddly squanched up, right? This is the entire week of trading right here, right? The entire week of trading right here. Looking at where price opened and where price closed, right? This is a up close candle, right? A up close candle because price opened here and price closed over there. If we look at this candle on the weekly, this would be a up closed candle, meaning that the candle closed higher or up from where it opened, right? See, that's the candle there. It's a up closed candle. We opened here, right? And we closed here. Okay, so that means we had a open, right? This was all the low we went, right? This was as high as we went, and then we closed right here, right? So we have us a up close candle, a up close bar. When you read the bar, that gives us a open, low, high, close bar. Because the open is always on the left of the bar. The close is always on the right of the bar, right? And read it that way. So to know that it's a up close bar, it's a open, low, high, and a close. to know that it's a down close bar, it's a open, a high, a low, and a close for a down close bar, right? So we got an open, low, high, close type week, up, close, week. Question: was this a power of 3 week? Was this a power of 3 week?
No, I don't think so. I think they'll call this an inside week.
Okay, you say you don't think so. They'll call it an inside week.
No, I don't think it. A power of 3 is AMD, right?
I don't like thinking. Yes, power of 3 is AMD.
Okay. So, well, we stayed inside that range. You say you got the week marked out with the high and the low.
Mm-hmm.
Okay. Y'all usually call that an inside week. But I'm gonna go with no on the PO3.
Okay, we got a no for the power of 3 from Lump. Who else? Any other takers? We got some chat typers saying no. We got a no in the chat. We got a no in the chat. We got a no in the YouTube chat. So, with that being said, shout out the no's, man. Confident no's. The maybes. The maybes a little sus. Shout out the confident no's, man. The confident no's. He is, man. Got 2 different YMs open. Shout out the confident no's, man. That you want to have a hard hitting confident no when you say it, right? And why is it not a power of 3 week? Not because it's an inside week. That ain't got nothing to do with it. An inside week just means that it traded inside the range of a prior. This wasn't even an inside week. I don't think it was. I don't think this was an inside week. Let's look and see. No, it wasn't. We traded well above last week's range. This is last week here. We traded well. So this is not even an inside week. But why, spam risk, stop calling me. Why is it not considered a power of 3 week? All right. Lump pretty much already said it now.
We never traded, really manipulated back down into the previous week and never traded back into the range to close out the week.
Okay, nah. Give it to me real simple.
There's no accumulation and manipulation.
Yes, there was no, over the span of the week, price did not accumulate, then manipulate and distribute. There was no AMD. The simple way to say it is no AMD over the week through the span of the week, right? For it to be a power of 3, right? Because a lot of people get it confused. You look at this calendar right here, and the first thing they'll say, oh, this was a power of 3 week, right? Why? Because you had an open, you got a low, you got a high, and you closed off of the high. So the first thing they say, oh, this was a power of 3 week. Look at that candle. That's a power of 3 candle. Not a true statement. A power of 3 candle is made up by price opening, giving you accumulation at or near the open, manipulating below or above the open, depending on if it's going to be an up close or down close, right? So it gives you an area of accumulation at or near the open. It gives you an area of manipulation, right? And then it gives you distribution, right? Above an old high or below an old low. So you want to have that accumulation, manipulation, and distribution going throughout the week, right? We didn't have that over the phase of this week. Looking at the weekly price, we opened and just went up, right? Opened and went up. And looking at price, we never really came back and took out any significant sell side based off of how the weekly went, right? See this right here? We never took out any significant sell side from here. That low, that low, that low, that low, that low, right? We never took out any significant sell side, right? A couple of times we took out some internal sell side there, 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 right? But we never took out any significant sell side. So it was just a, pretty much a trending week up on the whole overall scheme of it. We had some very ugly consolidations throughout the week, right? Very ugly consolidations, right? Consolidated here during this time. Let's see how long we consolidated here, right? We consolidated here. When we lead a consolidation there, right? Says 1 day and 5 hours. These 15-minute candles, 115 bars or more in this little area of consolidation, right? This little area here, right? Before leaving that area there. 1 day, 23 hours, 182 bars or more, 15-minute candles before leaving that area there. Right? Then once we left that area, we came over here again into a new area, 105 bars. And it's a wicked, just sideways movement, right? Move up, sideways, move up, sideways, move up, sideways. Wicked high resistance throughout the week, right? Had a couple spurts of large price action here, right? During the London, right? Large spurt here. This is from the London up until the New York morning, right? Large move here. This is late in the Asian up into during the London, right? Large move there. That's the New York morning, right? Large move there. That's the New York afternoon, right? And then the rest of it is just sort of a move there during the London, right? A ugly move down here during the New York, right? This was very high resistance, right? Ugly high resistance move down, right? And then a kind of a trickle up, but all this is pretty much just consolidation. So very ugly. It was, you had stuff that was tradable if you be Jack, be number Jack, be quick. But the granular moves, nice smooth moves was this one, right? And maybe this one here, right? And then this one here. But you had to be in the move early. Now, this one here, it did give opportunities to participate, right? Did give opportunities to participate, but this one had to be in it early. This one here, you needed to be in it early. You got one chance there early and one chance. This one here had to be in there early because it was just a blast off, right? So not the easiest week to trade when it comes to low resistance liquidity runs, but tradable nonetheless if you understand the concepts. All right, so let's go back and look at it day by day. Right, let's look at Monday's trading. Okay, we already on 15-minute time frames. Let's see if we had anything of significance we want to look at for Monday. All right. This is Monday's trading here. We had this SIBI. This is a daily SIBI, right, that we had drawn up into on Thursday and Friday, right? We had drawn up into this daily SIBI on Thursday and Friday. And then on Monday, we gapped up, had a large gap up on Monday, right? That's what gave us this new week opening gap here. We had this buy side there that we was watching to complete the market maker buy model. As we have been speaking about for a while, we said that this was our smart money reversal. This was our low risk buy, right? And then we had moved into an area of accumulation here, right? Boom, we took off from this area of accumulation there, right? We was accumulating, we dropped down into the fair value gap, pushed up, right? And then we didn't get this day inside day right here. That was our retracement. It was the only retracement that we got, right? So having this area of accumulation here where we consolidated here for a few days, dropped down below the sell side into that discount PD rate and traded back up, taking out that buy side. What price engine model is that, right? For this area of accumulation, what price engine model is that? Consolidate, take out the sell side, then expand away and take out the buy side. What price engine model is that? Hello, is this on? Hello, anybody there?
Is that the reaccumulation?
Not re.
Surge, consolidate.
Price engine model. Price engine model. Not re. You're close, but it's not re.
What was that question? I missed that, Tim.
What was the price engine model here at this area of accumulation when you consolidate, drop down, take out the sell side, then displace and take out the buy side? What price engine model is that?
Never told you that you're
Offset.
Offset. What? Offset.
Accumulation.
Offset accumulation. Very good. Right. You got two price engine models, right? You have offset accumulation and reaccumulation. And then you got offset distribution and you got redistribution. Offset is when you get the Judas swing, meaning engage liquidity, then displace away, or engage liquidity, then displace away. This is offset accumulation. This is offset distribution, right? Reaccumulation is when you expand and retrace to an area of fair value, right? Expand and retrace to an area of fair value. Reaccumulation, redistribution. All right. So over here, we got the price engine model of offset accumulation, but this little inside day right here was the only retracement that we got, because once we had this inside day on Friday, we gapped up on Monday and nothing could stop me. I'm all the way up, right? As for now, right? These are daily candles, so price very well can give us a retracement here, and that would be our consolidation, expansion, reversal, retracement, and deliver, right? If it decides it wants to play out like that. But for right now, we did not get the retracement to participate in this move, right? We got the consolidation, expansion, reversal, and just kept going, right? Right here, this is the only amount of retracement we got when we traded back down into this range here on the next day, right? We took out the buy side, right? We enticed the shorts, punished the shorts, right? And then pulled back, and then we pulled back a little more, and then the next day we gapped up and never look back, right? So on Monday, right, we gap up, right, and open here. So then we're watching that high right there to complete the market maker buy model. Let's chop off everything except for Monday, right? And let's go down into a 15-minute chart. Okay. Now, remember we opened up and we said that this is the liquidity we're watching for, right? This is the liquidity that we're watching for to complete this humongous market maker buy model, right? On the 15-minute, this is our smart money reversal. This was our low risk buy. This was our first stage of accumulation. I like to call it on the right. I like to say reaccumulation, so I know that it's on the right side, but this is our first stage of accumulation, right? We come here, we get the price engine model of offset accumulation because we consolidate, trade down, right? Trade up, right? That's our offset accumulation right there. Price engine model of offset accumulation. Okay. It's not beautiful, right? Because we kind of got like these two areas of accumulation kind of merging right there, right? So once, because we come here, go down, right, and move up, then we start accumulating again, right? They're kind of merging right there, right? Then we get another offset accumulation here, right? Then we go into another little ugly little area of accumulation there. It's not the most beautiful, right? It's not the most beautiful. And then, right, this entire little area here, right? This was Friday. No, this was, yeah, this was the whole week, right? No, this was Friday. This was the end of Friday. Yeah. Yeah, this was Friday. Yep. This was Friday right there, right? Some of Thursday came up and we get this big area of accumulation there. And then we gap up on Monday right there. All right. That's our Monday gap up. And remember, we're looking for this buy side as the draw. Okay. Now we gap up on Monday here, right? Gap up, push up a little bit there, trade back down, take the low that we created when we first opened, trade back up above the high, retrace back down into the top BISI, leaving the breakaway gap, trade down into the lower BISI right there at 7:15, leaving the breakaway gap at 7 p.m. Right? We take off and we take the buy side by 9 o'clock. Boom. Buy side taken. All right. Once we take the buy side, we just kind of hang out there at that buy side, engineering liquidity. Right. We do retrace back down into the imbalance, into the wick of the bullish order block here from 8:45. The BISI is from the 9 o'clock candle. We do trade down into it, but overall, we're just kind of here hanging out, engineering liquidity. All right. We open up here on this candle there at midnight. That's the true day open, right, for Monday's trading. Right, even though Monday has been trading already for 6 hours. Right. Sorry about that, y'all. Been trading for 6 hours already, right? But this right here is the true day open for the algorithm. We open up there at 20,525 and a half, right? That's the midnight. That's the midnight candle there. Right. That's our midnight candle there. So we open there. Start to expand up there. Take out that short-term high there. Just slowly stepping up. Right. We do have a really small imbalance in that. Look like, do we have one? Is that imbalance? The highest 229.50? No, we don't. Nope. So we very careful overlapping everything. Right. Take out the short-term high. And then here at 115, right? We clear both sides of the board. Right. Might have been some tariff news or something like that. Right. Because this clearing both sides of the board like this right here, taking out buy side, taking out sell side, that right there, that probably was like some tariff something going on, because tariff news was like plaguing the week. Last week, this week, everything was like plaguing something, right? Then once we cleared both sides of the board, right, price displaced away, creating a bullish fair value gap, right, taking out the high that was set during the Asian after taking out the buy side, right? Then we here on the 215 candle, we traded back down into that 130 BISI one more time. We did trade into it on the 2 o'clock candle, but on 215 we traded back down into it one more time. All right, and then price, nothing can stop me. I'm all the way up on the 3 o'clock candle. Right. And this is what I was talking about when I said you had to be in the move early. If you did not, right, if you did not participate on this move back into that 130 BISI, or with this move at 245 back into this 215 BISI, right, you was not able to participate in this run up during the London Open. It took off. All right. Now, after the takeoff, it did give an opportunity to participate during the New York session, right, on this blast off, because we came here, right, consolidate and engineer some liquidity right here at this high, right, and then here at the 930 open, we dropped down, took out the sell side, right, dropped down, took out the sell side, did not trade back up into the 930 SIBI, right, dropped down again after sweeping the sell side, swept the sell side one more time. Let's go over here and check out OG OTE real quick. All right, we're going to go check out OG OTE. I just want to check it to see if we hit it. All right. Right there, we got an OG OTE. All right. Gave us an OTE for those who trade OTE. If you, now I didn't just pick any random low and high to anchor the fib to, right? There is a strategic way that you anchor the fib that I'm not going to get into now, but Michael has OTE videos on his page. If you're part of the Asian Assassins, I got an OTE lecture in the Asian Assassins playlist, right? There's a very specific expansion leg that you anchor the fib to when you're looking for OTE, right? You just don't randomly pick a low and a high and just say, hey, let me see if I can get an OTE. And as you see here, we did get a 62% OTE. We did not get the sweet spot. We did not get the lowest risk, right? But we did get a 62% OTE during a very specific time. It's inside the New York kill zone right here between 10 and 11. You know, the old silver bullet hour, as people like to call it now, right? During the New York kill zone, we got a OTE based off of a very specific time expansion, London Open, right? Coming off of an area of accumulation, OTE entry right there. OG OTE entry during the New York session. And based off of how I trade OTE, profit target hit at 4 p.m. on the 4 p.m. candle, right? It was after 4 p.m. right? Profit target hit after 4 p.m. right there. Because I trade OTE back to the high. You can add extensions if you want to, but I trade it back to the high where it was anchored at. And that is your Monday's trading. Now, let's move on to Tuesday. Anybody got any questions about Monday's trading before we move on to Tuesday? Anybody not know what OTE is? Anybody confused about anything that I said? Anybody don't care?
Well, it's Friday evening. It's hard to concentrate, you know.
Hey. So, hey, I guess that means we gonna need to go ahead and shut it down. Y'all ready for me to shut it down? I could
No, this is always good information. And like I said, refreshers about different things.
All right. That's our next level of buy side after taking out that level there.
Hi.
Hi. Who is that?
Yeah.
Who is that? I don't know that
Hi.
voice. Say what?
That was Ryan Toomer, who heard her auntie's voice and said hi and then ran away.
Oh, what's up, Ryan? Nice to meet you, Ryan.
Thank you.
That's my niece right there. Yeah.
Oh, you some kin to Joe?
Yeah, that's my brother in love.
We did it, Joe. We did it. All right. So after taking out that buy side liquidity, completing that market maker model there, that was our next buy side target there. I think it was a weekly gap somewhere. Yes, it is. There's a weekly SIBI up there. Click wrong one. Nope. I guess I don't have it drawn out. Here. All right. Keep doing that. Okay. All right. So that was our next buy side target there. We have that weekly SIBI up there. And then I think Jim pointed out this buy side target here today, right? I didn't have that one on my radar. Now, let me explain why I didn't have this one on my radar. Whenever I'm marking out buy side targets on a level, I want to be a swing high, right? Here on the weekly, this is not a swing high, right? But on another time frame, I'm pretty sure that's a swing high. Like if I go to a daily time, oh, that's a daily. On a daily, it's not a swing high. On the weekly,
I think it's a 4 hour.
It's a high. Yeah, on a 4 hour, it's a swing high, right? So on a 4 hour, I would have that marked out as buy side right there. But on a daily chart, I wouldn't have it marked out as buy side on the daily chart because it's not a swing high, right? It's not a swing high. But doesn't mean that you can't use it as a liquidity pool, because it's a daily high. Daily highs and daily lows are sources of liquidity pools. Okay, that's just my preference of wanting to mark out the liquidity on my different time frames as a swing high or a swing low. Right, that's just how I choose to mark it out. All right, so Tuesday we had a very small new day opening gap. As we see here, very, very small bearish new day opening gap, meaning that price opened slightly lower than we closed at 5. At 6, we opened up slightly lower. All right, so let's go to 15-minute candles and look at Tuesday. All right. Okay, so when did that come into play? This doesn't exist yet, so let's turn that off, because that don't exist yet. All right, the other thing we have over here is this SIBI. Right, we got this SIBI here that we had traded up through before. Right, that's above price at the time. When this day opens, we're here. Right, when Monday closed, we're here. So the only thing above price right now is this SIBI that we traded up through and respected consequent encroachment. We repriced the entire thing, but the closure here respect consequent encroachment. So now I think we spoke about this. We're anticipating price getting above this and using it as an inversion fair value gap. If I'm not mistaken, we talked about that back here when we was going through there. All right, so we're looking for, as we open here, the bias is drawing to this liquidity with the narrative of closing above this SIBI and using it as an inversion fair value gap / support to continue higher. All right, go to 15-minute candles. Look at Tuesday. All right, so here we are. We open here on Tuesday. Now, all right, looking at Tuesday's price action, right? Remember what we asked about, was the week a power of 3 week, right? Let's look at, will it show me Tuesday's candle if I change it to days? Let's see if it'll just show me Tuesday. Okay. All right. Tuesday's candle here, right? We had an open, we had a low, we had a high and a close. This was a up close candle, right? Up close candle. Looking at what price did, Tuesday was a power of 3 day. This was a power of 3 day, right? We opened here, had an area of small area of accumulation right here at or near the open, right? We dropped below the open, taking out liquidity, right? We dropped below the open, taking out liquidity. What does that do? That entices shorts in, entices shorts in. Then we came back above and took them out, right? Came back above and took them out. So we accumulated, we manipulated, right? And then we went up and distributed above an old high over there, right? So this was a power of 3 day accumulation, manipulation, and distribution, right? Closing off the high up there. So Tuesday was a power of 3 day. All right. Put this back on week. Right. This is what our weekly candle looks like so far. Right. Very, very strong week. Really not much to talk about for Tuesday outside the fact that it was a power of 3 day, right? Power of 3 day. This 8:30 news candle right here, right? The 8:30 news candle was used to clear out any shorts that was still in, right? Any shorts that was still in above this high, right? When we entice shorts in here, we came down and enticed shorts in. If they didn't put the stops there, stops was here because this is the actual range, right? So any shorts that wasn't taken out there, the 8:30 candle wiped them out, right? The 8:30 candle also dropped below the opening price, right? It also dropped below the opening price, giving smart money the opportunity to buy below the low, right? Gave smart money an opportunity to buy below the low, right? It traded below the opening price. I mean, below the open. I said the low. Traded below the opening price, okay? And then once we did that on the 8:30 candle here at 9:30, we dropped down, right? Did not take out the low, right? Drop down, did not take out the low, right? Again, enticing in anybody who chomping at the bit to go short, right? So at 9:30, right, you see we get us a bullish Judy swing, drop down, turn back around, and nothing can stop me. It's all the way up, right? Doesn't pause until the 950 to 1010 macro. Paused for a little while, and then price continued up and stopped right there at that buy side liquidity that the target was over there, that buy side over there. And so that's pretty much it for Tuesday. Not a lot to talk about. Like I say, if you did not get a chance to participate early, right? If you did not get a chance to participate early, like saying inside this news manipulation or this 9:30 manipulation in here, wasn't a lot of opportunity to like participate. And once it gets all the way up here, you tend to feel like I'm just chasing price. So, if you had an opportunity to trade something in here, happy trading for you. But just for this review on the 15-minute time frame, right? No clean entries outside of this manipulation area. And again, power of 3-day on Tuesday. All right, let's go over here to wetness day. Let's go to wetness day. All right, so on wetness day, we have a very small bearish new day opening gap, meaning price opened up slightly lower at 6 o'clock. Then it closed at 5 o'clock, right, on Tuesday. And then remember we had that. So when we opened up, price was here, and we had come up and set relative equal highs there at the high, right? So we've come up, set relative equal highs at the high, and we have closed above consequent encroachment of this SIBI that we were anticipating price to trade close above and use as an inversion fair value gap to continue higher. We've closed above the consequent encroachment of the SIBI. This is a sign that this will not be used as resistance. It's a signature, right? When you close above consequent encroachment, when you're trading up into an imbalance, if you close above consequent encroachment, that is a signature that it may not resist price. It may fail, meaning we will trade through it and close above it and then possibly use it as an inversion fair value gap. And that goes in line with the bias and narrative that we had for the week. All right. So remember, yes.
That signature is across various time frames, right? Not just high time frames?
Yeah, any time frame.
Okay.
Any time frame when you have an imbalance. I'm glad you asked that. When you got an imbalance or any PD array, right? If your bias, let's talk about this here. If your bias is bullish, if your bias is bearish and you got a bearish PD array, right? You want to see price just touch it and go. You do not want to see, you preferably don't even want to see it trade into the upper half of it. That's the preference. But it can wick up there, but you don't want to see body closures above or below consequent encroachment of any PD array. Blocks is mean threshold, gaps, it's consequent encroachment, 50%. You don't want to see it closing beyond 50%. If you're bearish, you want to see it touch it and go. If you're bullish, you want to see it touch it and go. Right now, if you're coming up to it and you're bullish, but it's a bearish PD array, you want to see it fail. You want to see it close above consequent encroachment. You want to see it close above it and use it as an inversion fair value gap, right? So if you got a bearish PD array above you and you're bullish, you want to see it fail. But if you got a bearish PD array above you and you bearish, you want to see it resist price, right? That 50%, that's the line where you don't want to see price even touch. And if it wicks through there on a closing base, like here, right? See, at this time, this was a bearish PD array and it was bearish. See how price traded all the way through it, but it closed below consequent encroachment, right? It opened below consequent encroachment and then it closed way down here, right? So it gapped up, right? Opening just below consequent encroachment, traded up through it, but then closed all the way down here, right? So it's respecting consequent encroachment of that imbalance right there. And over here, now that we've repriced it, right? We've repriced the entire thing because traded both directions there, right? And then we came down there. So we've repriced this entire area here, right? This entire area here. We offered sell side there. We offered buy side and sell side here. And then we came back up over here. We offered buy side to the lower half, right? So now this entire imbalance has been efficiently delivered. We've offered buy side and we've offered sell side, right? Offered sell side first. Okay. Now, open here, and this was the target. We had relative equal highs. Let's go down to 15-minute candles. Okay. So this is where we opened up at for Wednesday's trading here on Tuesday night. Right. We open up here and we, set a range there, right? We set a range here, right? Trading up into the SIBI from 345, and we traded down, taking out the short-term sell side that had been set with these relative equal lows here. Traded down, took it out, and we traded back up and eventually took out the buy side that we had created those relative equal highs, right? That was the draw that was looking for price to draw into the day before. And then right here on this 245 candle coming into the London kill zone, engaged it, right? So once we engaged the buy side, price traded back down, right? Let's zoom out some. Right. We engaged the buy side, boop, showing bullish intent when the bias is bullish. Okay. Then once we took it out, we came down, enticed in shorts, right? Traded down, took out the sell side, enticed shorts in, and then we reverse, wiped them out. Right? What do I call this signature? This is my favorite signature, right? What do I call this? right? When we go the direction we supposed to go, we turn around, take out the opposing liquidity, and then quickly come back and rip their face off. What do we call that signature right there? It's my favorite signature.
That's your Judas.
All he said is that somebody
it's a double Judas. What do we call it?
The wig.
Oh, the wig snatcher.
The
My
wig
bad.
snatcher.
Yeah, my bad.
The wig snatcher. We go in the direction we're supposed to go, come back, entice in the opposite side, and then come back and rip their face off. That's the wig snatcher, right? And then we come over here with this 930 and 945 candle. Remember, was like this was like looked like news candles. We talked about this on the live stream. We had this 930 candle and this 945 candle. Was like, man, this looked like a news wick, right? But once we had the wig snatcher set up there, right, we traded back down into the discount PD array. We had this crazy 930, 945 thing going on there. I can't remember if we actually had some news at 945, but we had these two wicks there. We're talking about how they look like a crazy news candle. This was a very high resistance, ugly day. But as you can see, we went up, manipulated people back out again, right? Because I'm pretty sure somebody moved their stop there when price took off like that, manipulated back out again. But what we did not take that low that took the liquidity once price showed you where it wanted to go, come back, entice shorts in, punish them shorts, and then it never came back down to that low again. Just came back down into the imbalance, right? Extreme high resistance, never took out that low again. Right. We talked about this that day too, because at first glance, the first thing you say is, man, this is a seek and destroy day, right? We took our buy side, we took our sell side, right? Then we came back here, right? Took our buy side, and then you say we came back and we took out sell side again. No, we didn't take out sell side, right? Then you say, okay, we moved back to buy side again, but we came and took out sell side this time for sure. Yes, we did, but we didn't take out sell side there, right? We didn't take out the set because this is your range, right? We didn't go all the way through the entire range. So it's just extreme high resistance, right? Here we took out buy side, we took out sell side, set a new dealing range, right? Once the new dealing range is set, we never came back to external liquidity, right? All we did, we expanded a new high, right? Expanded a new high, right? That's all we did, right? Never went into a true seek and destroy type profile, just very, very high resistance, all right? And we traded into the buy side liquidity. That is your Wednesday's trading. Let's go see how many people are thirsty. Let's see how many people are thirsty. And now we can turn this fair value gap back on because it exists now. If I could find it. Maybe I didn't name it. There it is. I didn't name it. Okay, so now this BISI exists now because this Tuesday, May 13th candle, that's the BISI. Once this candle here closed, now this BISI exists. All right, that BISI exists, and we are opening price up here, right there. We're opening there. We got a small gap down, right? This is where we're opening. When the price opens up, we have a daily fair value gap below us. We have a daily fair value gap above us, right? And then we have another buy side target up there. And we also got a new day opening gap above us, right? From the 27th. Okay. Right here. 27th of February. All right, let's go down to 15-minute candles. 15 candles. Okay. Move this out the way. That's where we open price up at. Right here. This is where we open price up at. There. We open here. All right. So we got a slight gap down. All right. Kind of did a lot of consolidating. Traded up toward the high of it. Didn't quite make it to the high. We did fill in the liquidity void, but we didn't make it to the high of the gap. For those who don't know what a liquidity void is, a liquidity void is where there's no buy side or sell side delivery at all. No price traded in here. It gapped from there to there. It closed here at that time, opened there at that time. That big space where there's nothing happening in between those two candles, that's a liquidity void. Right? We did reprice the entire liquidity void by the time we made it to this 9 p.m. candle. By the time the 9 p.m. candle closed, but we didn't make it all the way to the high of the imbalance. Okay. Traded up, set relative equal highs, right? Set relative equal highs here with the prior day evening session there. All right. And then we dropped down, had a bearish break in market structure, right? And the midnight, I don't even have a midnight line over here with me. Where did I leave it? Right here. Okay, so we open up midnight very close to the to the 6 p.m. open, right? The low of this new day opening gap is the 6 p.m. open. The midnight open is just 3 ticks lower, right? The midnight open is 21,379. The 6 p.m. open was 21,379 and 3/4, right? So it's just 3 ticks lower, right? And then we displace down, right? Shortly after midnight, no, actually at 1 o'clock. So at 1 o'clock, we displace lower, right? Taking out, right? All of the sell side that have been created during the Asian, taking out the Asian sell side and sweeping out, right? Afternoon prior session, sell side there. Okay. Retrace back up into the premium of the range, right? Then displace down, coming all the way down to that new day opening gap. That bullish fair value gap on the daily, the one that was created, that we had just created with the closure of the day prior's candle at 513 BSI, right? So from 230 ish, so around 230, 245 up until 5 a.m. price retrace and then drop down into that daily fair value gap that was below price. Once we hit that daily fair value gap, right, that is a anticipatory reactionary point. Why is that? Because price is bullish, right? We're in a buy program. The draw is upwards, and we have a daily bullish fair value gap that's below price, right? It's in the discount it's a discount PD array 1 because it's below price, and it's in the discount of the range that we're watching, right? It's in a discount of the range that we're watching, right? Come over here when we leave there. Come, this is the highest high right there, right? this is the range you're watching, right? That's your low, that's your high after leaving this balanced price range, right? We're not looking all the way down here, right, for it to come to a discount, because all of this was efficiently delivered and then we left there. So we want to look at the impulse leg that left the balanced price range. This is the impulse leg that left the balanced price range right there, right? This is the daily fair value gap that's below price, right? And then notice, right? Remember, I told you when you're bullish, you want to see price get there and get gone. Look how slightly below equilibrium price came, barely tapped into any type of discount, right? Pretty much just came back to equilibrium and took off, right? So we hit the anticipatory reactionary point, came to a very slight discount, then we came up here, right? This right here is your change in the state of delivery on the 15-minute time frame. There, that's your change in the state of delivery. That's your bullish order block, right? If we run our Fibonacci tool, right, on the bullish order block there, right? Even if you go body to body, right? Body to body, we came back to mean threshold, right? But since it's not a really long wick, you know, I don't mind including the wick when it's not a really long wick, but the bulk of the volume is in the bodies. So if you look at body to body, we came to mean threshold of the order block, right? Go to the wick. We didn't even get to mean threshold of the order block, right? We have a inversion fair value gap, right? That we also traded down into right there on that 830 candle there. So we came back to mean threshold with the body to body, respect the mean threshold without touching it, wick to wick, and also came down into the inversion fair value gap on this 830 news candle, right? 830 news candle. Thursday is job numbers. Yes, Thursday is job numbers. And we had something else this week. I can't remember what it was. Was it
I thought it was PPI.
PPI, yeah, PPI. So PPI with the job numbers. Okay. Very high resistance again during the New York morning, complete trash, but still respecting the order flow. Came back down to the inversion fair value gap one more time, right? Traded back down again into this bullish fair value gap here one more time, right? This right? This 945 candle came back to the inversion fair value gap, respecting consequent encroachment of the deepest wick. This 1030 candle came down back to the fair value gap there, closing well above consequent encroachment of the deepest wick at this time. And then here at 1045, nothing can stop me. I'm all the way up. Right. So if you did not participate on any of these, this retracement or any of this accumulation here, right, then you didn't get an opportunity to participate in this run all the way back up above the buy side there and up to that new day opening gap. Okay, dokie. Okay, to the dokie. And then we once we hit that, we had a nice retracement after hitting this target up here, had a very nice retracement all the way back down into the lowest imbalance of that displacement leg. Right. Retraced all the way back down in the afternoon. So from 115, 130 ish, because this closed at 130. So from 130 all the way up to 315, price melted down all the way back to the lowest imbalance in that displacement leg from 1045 that morning, right? And then once we got into the 315 to 345 macro price expanded back up, heading back toward the short-term buy side right there into that SIBI. Right. And that is your Thursday's price action. Right. Which brings us to today. Go ahead and put the meat on the bone. All right. Put the meat on the bone. So as you see, I already had Thursday's high and low marked out. Right. We opened up today here. Right. The new day opening gap was inside Thursday's new day opening gap. The darker gray area there at the top, that's the very small that's not even, let me go check this. That's not even lining up on nothing. Let me check this out real quick. Not even lining up on nothing. What's going on with that? Got it anchored wrong. Had it anchored on the open. Okay. So now it's anchored right. All right, so we open up. Let me hide this because I can't hardly see the where we at. All right, so we opened up here. All right, and as you see today, today was a day. It was an inside day because this is Thursday's low and this is Thursday's high, and this right here is all of Friday's price action right here. All of Friday's price action is inside the range of Thursday, right? That's the high, that's the low, and all of Friday's prices inside that range, right? So we had an inside day today. Okay, today was an inside day. And we opened up over here, right? We consolidated some, moved up, right? Did not take out that buy side there, right? We traded back down, back to that prior buy side that we had engaged, right? Did not take out that sell side there, right? Traded back up into the range, going toward midnight, right? Going toward midnight, created a inversion fair value gap there on the way up. But then once we got to midnight, stopped, boop, right there, the last up close candle of the bearish order block. We traded back down, right, on the other side of that inversion fair value gap, creating another inversion fair value gap from the 10-15 candle, but we did not take out the sell side, right? So now we have engineered sell side here, right? Engineered sell side there for the new day trading, right? This is a prior day low right there, prior session, right? Starting at the new day, right? We've come up, set a high there, right? Did not take out that buy side. We dropped down, set a low there, right? So we took out sell side, set up a new liquidity pool here, have not taken out any buy side there. So we have not set up a new liquidity pool up here yet. A new one is set down there because we did take out a low. Okay. All right. So now here, boop, we got a new liquidity pool there. After midnight, we come down, set a relative equal low at this new liquidity pool right here. right? We trade up and we take out buy side there. So now we've set a new liquidity pool here, right? So now we got a new sell side liquidity pool, and we got a new buy side liquidity pool there, right? Right here at this point. All right. Tracking there. So we're going to take this out of the way. So here, that right there is a matter of fact. Let's do it like this right here. Nah, I'll do it like that. That right there. That's our new sell side liquidity pool. And right here, once we took out the buy side, right, we've engaged buy side. Now that's our new buy side liquidity pool, right? So now this is our new dealing range there, right? We got internal sell side there, right here inside our new liquidity pool that we retrace back down, right? Make a low right here, right? Trace back down, make a low. So now we got internal sell side there, right? Then we trade back up, boom, and we extend out our high, right? Creating, right? This is where the liquidity is there. This is where the liquidity is there. All right. So we got internal sell side here. We drop down, boom, engage the sell side, right? Engage the sell side. We immediately reverse, entice in longs, right? Drop down, engage the internal sell side, immediately reverse, entice in the longs, then switch around and punish them longs, right? Punish the longs. Now that the longs have been punished, right? Where did it say it want to go? To the other liquidity pool, right? So we engage the short-term sell side, go in, boop, hit our liquidity pool at the top, enticing in longs. That's uber bullish, ready to just chomp at the bit and chase the price. Turn around, bust their heads, right? Because you entice them there, they put their stops there, come back, bust their heads, hang out there for a little bit there, right? Very efficiently, high resistance consolidation type, trading in there, right? And then once the macro time is over, spike up above these highs there on a lower time frame, right? Spike up above that and then drop down into what? The new liquidity pool that we had created over there, right? So now this is our dealing range here. Boop, there, right? That's our dealing range there. Once we come down, take that out, right? And then we reverse, come back, trade back up to the midnight price. No, I got midnight on here twice. What's going on there? Get out of here. What is this right here? Got midnight on that 2 times. Right. That's midnight right there. Right. Trade back up to the midnight price. Right. On that 1045 candle. Right. Then we slowly just make our way all the way back up to the buy side. The buy side, once we get to the buy side, offset positions, or it's like people like to say, do some profit taking at Friday afternoon. All we did was distribute above the high, drop down, closed off just below midnight and just above the 6 p.m. open. And that is your weekly recap. Sorry it took so long, y'all. We hadn't had a weekly recap in a while. And I just want to, I feel like running my mouth. Do anybody got anything for me?
Like this week, the worst times to trade were between 9:30 and 10:30 in the morning.
Yes, it was this week. A shout out Day Trade Professor, man. Hey, we I think we finally convinced the Day Trade Professor to come over here to the futures world. Day Trade Professor be going live and trading the MNQ futures. The Day Trade Professor, I want to say I think he pulled down by 5,000 a day. I think it was like 5,000 a day he pulled down trading the MNQ. Right? He done came over to the futures world. Day Trade Professor. Y'all go check him out. Y'all, I don't know if y'all remember Day Trade Professor. OG Gang probably remember Day Trade Professor. He used to be on Instagram a lot. I think he'd be on YouTube now. I'm not sure. But I be seeing him on YouTube. But I oopsed up on him. I had pulled up on his channel one time, and he was trying to teach me how to trade trend lines. Y'all know it was busting me in the head trying to figure out how to trade trend lines. I was kind of understanding it. But I was like, man, I just got to do the ICT concepts. I can't deal with the trend lines. Like I was understanding. I could see what he was saying, and I would, based off the ICT concepts, I could see why the trend line stuff was working at certain times, but I need a little bit more like why I'm doing this, and I could see why it worked a lot of times. Trend lines are good. Yeah, man, that's it. That's all I got. If ain't nobody got them, I'm going to go ahead and call it here, and I'm gonna go warm up some I got some BTJ wings leftovers in there. Got me a 2-piece tilapia and fries. It's from the other night. I ain't get a chance to eat it, and I put it in the refrigerator. And then last night we had the banquet. I got full at the banquet, and so I'm fun to go warm this up and eat. I'm putting it in the air fryer. You hear me? Gonna pop it in the air fryer. Probably season it up a little bit. You know what I'm saying? Give it a
Air fryer. Hold on, I don't mean to interrupt you, but what generation you from?
Hey, look
Air
here,
fryer.
man. Look here. You better step your
Come
game
on,
up.
man.
You better step your game up.
Oh man, I'm
Man,
convinced in the oven, man. Granny put it in the oven, man.
the air fryer make that thing taste better than the oven.
Well, your ancestors rolling over right there.
Hey, look here. They gonna roll. You feel me? Hey, man, I appreciate y'all for hanging out with me. Hey, for anybody who don't know the Day Trade Professor, cause he a good dude, and I ain't never heard of him scamming nobody, right? I ain't never heard of him scamming nobody, and he a good dude. Y'all go support my dude, the Day Trade Professor, right? I was just, easiest way for me to get to it is to come here, because I just looked at one of his videos today, right? This is his video right here from today. Let me go to his page right there. Put this in the YouTube chat right there. Boop. Y'all go check out the Day Trade Professor. Good guy. He trading futures now. He used to be trading like stocks and crypto and stuff like that live. And he used to always be flipping. He used to always be flipping this golly, what was the coin? Ethereum. He had Ethereum coin. He used to always be flipping it while he was talking. Always flipping the coin. Bloop, bloop, bloop. The whole time he talking. That what caught my attention. I'm like, what is he flipping? What is he flipping? But he had an Ethereum coin that he was flipping. But now he trading futures. Go check out Day Trade Professor, man. Good dude. And he always gonna say, baby boy. Hey, baby boy. He talk like he's from New York or somewhere. Baby boy. He always be saying baby boy. Go check him out. Good dude, man. Good dude. Day Trade Professor. He be doing like classes and stuff. Like you can. I think he got like some free courses. He got some books, and he be doing like some live seminars I don't know how much the seminars cost, but go check him out, man. Go check out Day Trade Professor. Good guy. Anyway, that's all I got, man. Y'all take it easy. Y'all enjoy y'all weekend, man. Hey, man, it's been a long time since we did this. So my mama was sending out all these pictures from our youth, and it had me feeling all nostalgic. I saw back in the day when I was walking around with no shirt on, looking like little Timmy Rogers. Had my physique out, looking like how my son be walking around here now. My mama.
Oh yeah, let us see the pictures. Let us see what they look like.
My mama gonna send the she gonna send the picture toss, and you be talking about my grandson. I wonder where he get it from. And then I saw this little skinny dude. He looked like my nephew, but I know it ain't my nephew. And I'm like, that can't be my brother. I don't know who that little skinny person is right there. But I said all that to say, man, take advantage of today while you can. Let your loved ones know that you love them. Don't just say it. Don't just show it. Say it, show it, then confirm it. Open up the lines of communication so that you understand their love language and they understand yours. If your spouse, your kids, your mother, your friends, anybody, if their love language is words of affirmation, don't buy them some Drakkar cologne. Don't buy them some Issey Miyake. Don't go get them a Dooney and Burke purse.
Yeah, man, it's 2025, man. You talking about stuff from 95, man.
Hey, before I finish what I was just saying, man, me and my brother and my mom and sister, we was talking on our daily calls, and we was talking about like old cologne that we still had sitting in our cabinets. And I had like an old bottle of Drakkar in there. And then so I ordered a bottle of Drakkar, a bottle of cool water, a bottle of Paco Rabanne. The Paco Rabanne ended up getting sent back because the address was wrong on the shipment. But man, when I tell you, I got that Drakkar and that cool water, I put on the Drakkar, it almost made me pass out, head hurting. I put on the cool water, it almost made me pass out. Hey, I said, how did I used to wear this back in the day? Man, my wife went to the store and bought me a little toiletry bag full of samples of colognes. She said, you would not be walking around with that old alcohol-based cologne on about to make people pass. So last night I was going through some of them, and I found some. It was the YSL, not the myself, or it was one YSL. It just was okay. I think it was called like myself or me or something. But the other YSL, it just said YSL. That smelled good. I put that on. Right. So I got me some up-to-date colognes that I can sample to see if I want to go buy some. Don't go back and get no 1990s cologne. I don't know how we wore that stuff. That, man, I sprayed that cologne on that thing. That stuff had my head hurting. Had the whole house about to pass out. Now, back to what I was saying, right? Tell your loved ones that you love them today. Take advantage of the day while you can, man. If your parents are still here, if you're blessed enough to have your father, you're blessed enough to have your mother, call them up. Say, Mama, Dad, hey, man, I was just thinking about you. Just want to call and say I love you. You know what I'm saying? Go in the next room, kiss your spouse. Go in the next room, hug your kids. If you got a dog, go for scratch their belly. They love it. Give them the scratches. They like the scratches, right? Hug the dog, kiss the cat, thump the gerbil, whatever you got. Take advantage of the day. Let your loved ones know that you love them, man. Ain't nobody promised tomorrow. And with that, until the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we call price action, it's your boy, Timothy Lee Rogers Sr., a.k.a. Aranya Grande. Oh, yeah, Big Spider always in here with me. He ain't never far. Now, all you got to do is just look over your shoulder, honey. He always here. Till next time I decide to get on Al Gore's internet, share my thoughts, name, they call price action. Y'all be safe out in these trading streets, man. Gone.